Good morning, this is Bloomberg Daybreak Europe. Happy Thursday. I'm Tom McKenzie in London. These are the stories that set your agenda. Nvidia earnings match forecasts, but blockbuster sales growth decelerates after 2 years of booming AI spend. Shares in the world's most valuable company slip after hours. Bloomberg learns Mexico plans to raise tariffs on Chinese imports after months of pressure from President Trump. Plus, Bayrou's battle, France's Prime Minister warns against new elections, saying he plans to negotiate directly with lawmakers over next month's confidence vote. So Nvidia earnings coming through, and that is reflecting across the markets, of course. This is what investors have been geared up for. There are expectations that you could see a move of around 6% either side for the S&P 500. It looks unlikely when you get that later today, of course, when US market trading reopens. There's a little bit of pressure on Nvidia after hours, as we mentioned. European stock futures, though, pointed to modest gains of 0.1% after essentially a flat close yesterday for European stocks. Here in the UK, FTSE 100 futures pointing to gains of 16 points. S&P futures then digesting the Nvidia earnings, pointing just a little lower, just by 0.1%, but within the context that you had another record high for the S&P 500 yesterday, up around 30% right now since the lows of the year on April the 8th. Nasdaq 100 futures also, of course, with that read across from Nvidia currently pointing lower just by 0.3%. So no major shudders through these equity markets, a little softer, but again, in the context of those record highs. Let's flip the board and have a look cross asset. Then you've seen those moves into the front end in terms of US Treasuries with the yields down and the sell-off on the long end. That is moderated to some extent in the session today. 361 right now on the front end. That's where the attention should be, as well as the 30-year, where the sell-off continues, of course. But again, less pronounced in today's session. Euro dollar at 116. 3 straight days of softness for the dollar. We'll see how that story transpires, of course, with continued focus on the Fed and pressure and concerns about independence. $67 a barrel on Brent, just currently down 0.9%. So a heavier drop, in fact, in terms of the selling pressure on Brent. We got further criticism from the Trump administration aimed at India and its purchases of Russian oil. Gold, a little softer as well, down 0.2%. Let's get to Nvidia, though, because it has reported a 56% jump in quarterly sales. But the shares, as we've mentioned, have fallen in after-hours trading on the back of a tepid revenue forecast. The world's most valuable company still facing difficulties, of course, selling into China, and has excluded sales of its H20 chip from its forecast. The CEO, Jensen Huang, says he's lobbying to be allowed to sell its most powerful chips into China.
So I think the opportunity for us to bring Blackwell to the China market is a real possibility, and so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race.
OK, Jensen Huang speaking there, of course, on the back of those earnings. Let's bring in our Asia Tech reporter, Annabelle Trullers, now from Hong Kong. Annabelle's been working through the numbers through this morning. Annabelle, what stood out to you then from the numbers we got from Nvidia?
Yeah, I think that the China theme was really interesting and how that also played into the numbers. But just broadly, I mean, I think if anything stands out, it's also that Nvidia can have pretty good results, really. I mean, basically a slight beat on revenue for the second quarter, the third quarter projection pretty much in line with the average estimate on Wall Street. But that's not really enough to impress investors. And thinking about that forecast, for instance, I mean, Nvidia is looking for revenue of around $54 billion for the third fiscal quarter. The loftiest of projections had been for $60 billion. And so that, of course, played into sentiment. We saw the stock sliding, for instance, around 3 up to 4% in late trade. Not as much as perhaps options had been pricing, because it was looking for as much of a 6% slump. But still, though, the stock under pressure. And again, a lot of that coming back down to the question mark of what happens with the Chinese market in particular. Yes, it's making up less revenue, I think 13% in the latest reading. But still, it's an important market for the company and a big sort of unknown as to how they proceed from here.
And you talked about the China question, and H20, of course, is the primary chip, for now at least, when it comes to Nvidia and its China sales, and yet they have excluded them from their forecasts, Annabelle. What is the rationale for that? What does it tell us? What does it signal?
I guess it's just sort of the lack of clarity. I mean, it's not just a lack of clarity on the US side. And for instance, I mean, Ed Ludlow, our US tech correspondent, had an interview with the CFO of Nvidia, Colette Kress, for instance, after talking about this 15% commission that the US government was looking to place on Nvidia chips that it sold, or H20 chips that it sold to the mainland market. Colette Kress told us, look, we haven't actually got any of the details on that just yet. The talks are still in the early stages. It could, in fact, pose legal risks. So right now, they're not even looking at paying any sort of commission to the US government. So that's one side. There's also the China demand equation and how much they really want as well. What's clear is that Nvidia still sees a big opportunity in the mainland market. Again, going back to Colette Kress, but in the earnings call, she was talking about they could be shipping up to $5 billion of H20 chips this quarter alone, the current quarter, if geopolitical risks start to subside. I think that, again, goes really back to the China side of the equation. What else is interesting as well was Jensen Huang, and you had that in that soundbite at the top, but he's saying that China could represent a $50 billion opportunity for the company as well. It does depend on what they can actually sell. And yes, you've got that H20 chip right now. That's from the Hopper series. He's talking about maybe they could be allowed to sell some sort of newer Blackwell design, and that's something that even President Trump himself has hinted at in social media. Whether we get any further progress on that from the US side is a big question mark. And again, going back to China, what does Beijing want? And that drive for self-reliancy or self-sufficiency is really not going away.
Yeah, no signs of that abating. Bloomberg's Asia Tech reporter Annabelle Drulas going through the key lines, of course, and the implications of the Nvidia earnings. Annabelle, thank you. Let's get to the market reaction then and see how Nvidia is tying into all of this. Bloomberg's Paul Dobson, of course, our executive editor for Asia Markets, standing by. Paul, how do you expect the Nvidia numbers to work through the broader markets?
Good morning, Tom. So far, it looks like they barely caused a ripple, which is quite surprising given just how much expectation the market had been placing on these figures for the week. And as you said, the option market was pricing in potential volatility. We did see the Nvidia stock trade lower after hours, but the drop that we saw in the US futures markets for both the NASDAQ and the S&P weren't that pronounced to begin with, and they've largely paired since then. So there's still that sense that there's plenty of momentum left in the market that's put us on this really long rally that we've seen since that bottom in April. I feel like, you know, as people reassess the Nvidia results, as Annabelle was saying, there's plenty to be optimistic about within that as well. And the big question mark is that China revenue, which could rescue things, could take it ahead of its forecasts and all the rest of it as well. So markets seem to have just basically taken it as in line maybe with analyst estimates, and at least the Asia interpretation is we can move on to other things.
Well, talking of other things, Paul, what else is standing out to you this morning in the Asian session? I saw the lackluster demand for Japanese debt again, so question marks in terms of how that story evolves and the pressure on the BOJ. Is that the primary focus, or is there something else that's drawing your eye in the Asian session today?
That did certainly grab our attention towards the middle of the morning because it was a bit unexpected. While we've seen plenty of jitters over demand for Japanese longer-term bonds, the sort of short-term supply has been generally pretty well received. This time, though, we had pretty weak demand for the two-year notes, much worse than we've seen for several years, in fact, which betrays this idea that, you know, investors are expecting now the BOJ is going to be raising interest rates sometime soon. Might not be September, might be October, might be December, but at some point we're going to get one of those hikes. And the way that they're talking at the moment, it's not going to be the final hike either. And so the market is reluctant to take down bonds at this kind of a yield level in volume when the risk is that, you know, the price will drop again over time. So that was an interesting signal that was sent from the market. It didn't have huge repercussions just yet. We didn't see, you know, the yen rallying particularly, and all things being equal, you might expect that to be more supportive for the Japanese currency. But yeah, you know, this is definitely something that is playing on people's minds. And I think what's really important is whether that then, again, has repercussions for the back end of the yield curve, where we've got this really terrific story out there today talking about how international investors looking at really juicy yields that have been on offer over there, particularly if you take currency hedging into consideration. really thought that this was a wonderful winning moment and have been burned repeatedly and seen all of their investments kind of, or any profits from those investments disappear. And so that tells you that the Japanese bond market remains under a good deal of pressure.
OK, Paul Dobson, excellent, thank you. In terms of the market reaction, Bloomberg's executive editor for Asia markets. Talking of bonds, French debt, of course, has been under pressure. French Prime Minister François Bayrou says he will negotiate directly with lawmakers next week and has warned against new elections as he battles to stop France's parliament from forcing him to resign. Bayrou says serious discussions must now begin over next month's confidence vote.
Il reste 12 jours, et 12 jours c'est très très long.
There are 12 days left, and 12 days is a lot of talk. I'd said something simple. We haven't opened negotiations because there is a question to ask before negotiations. It's whether we agree on the seriousness and urgency of the situation. And if we agree on the seriousness and urgency, then we open negotiations. We will still have a month before the presentation of the budget. We have plenty of time to look at things. And I said I was ready to examine, measure by measure, as they say, decision by decision, everything we have announced.
La totalité de ce que nous avons.
Well, let's bring in Bloomberg's Caroline Cornas, standing by, of course, for the latest. Caroline, is this a Prime Minister who is trying to ensure that his ouster is not a fait accompli? How likely is it, how realistic is it that he can actually move the dial in conversations with other lawmakers in those 12 days ahead?
Every day we seem to have a new charm offensive from the Prime Minister François Bayrou, this time to the general public opinion, because as you know, he's the least popular Prime Minister since President Macron was elected in 2017. Clearly, he really tried to say that, again, the debt issue is the most important of all and that he is ready to discuss with every single opposition party. So he's invited all the opposition parties next week for a round of talks before this confidence vote the following week to try and convince them that the debt issue is the most important of all. And he said he's open again to discuss every single measure, including scrapping the 2 bank holidays, including the freezing of welfare and pensions, including perhaps a new tax on the highest earners. We'll see how the discussions go on next week. At the moment, the socialists, their only hope of survival for François Bayrou, have closed the door, saying you cannot really dissociate the confidence vote and the actual measures within the budget. And more politicians within Macron's own camp, including, for example, the former Prime Minister Édouard Philippe, are actually saying in the media over the past few days that perhaps new snap legislative elections is the only way out, even though François Bayrou said last night he doesn't believe that these new snap legislative elections would create any more stability for France.
OK, yeah, the argument from some, then, that you need to do something to break the deadlock in the French parliamentary system right now. What is next, then, Caroline?
Now, the question, of course, is are these new possible legislative elections a good idea for the socialists, for example, because the alliance between the moderate left-wing, the socialists, and the far left has been broken. So if the socialists have to go back to the polls, then they will have to be alone. Some of them might be afraid of losing their seats. Is that what they're going to think about over the next few days? This is perhaps one of the bets of Prime Minister François Bayrou. Meanwhile, he's going to speak to the MEDEF business lobby this afternoon. Of course, the business community is very concerned about this new political uncertainty in France. They're really exasperated with everything that's been going on over the past year. And you see the pressure, of course, on the market, even though we had a little rebound on the CAC 40 yesterday, plus 0.4% after 2 days of losses, we still see, obviously, the ongoing pressure on a French bond. The spread between the French and the German 10-year has reached actually more than 80 basis points yesterday, and it's getting very, very, very tight with Italy. You can see behind me, it's at just 5 basis points with Italy at the moment. So, of course, executives are very concerned about this uncertainty. They need clarity. They need a budget through. They need a new prime minister. If that's the way to go really quickly, of course, President Macron is the only one who can actually call a new snap legislative elections or even decide to resign. Today he's in Moldova with the Chancellor Merz. So we'll see over the next few days how these negotiations are going.
Okay. Bloomberg's Caroline Gonat in Paris. Caroline, thank you. Coming up, Mexico plans to increase tariffs on China after pressure from the US. We'll bring the details next. This is Bloomberg. A Bloomberg scoop right now. We have learned that the Mexican government plans to increase tariffs on China as part of its budget proposal next month. The move would protect the nation's businesses from cheap imports and satisfy a long-standing demand of US President Donald Trump. Bloomberg's Jill Decis is in Hong Kong with the details. How significant then, Jill, is this move both politically and economically for Mexico?
Yes, good morning, Tom. I think it's, very significant, right? So we're still obviously waiting on the details. This hasn't been entirely finalized, according to people familiar with the matter. But what this would ultimately aim to do is target imports specifically of textiles and also automobiles, which I think is pretty key, considering that Mexico has really become a top destination for Chinese cars, I believe overtaking Russia this year. So, obviously really, really significant there. For the Mexican government gives them an opportunity to potentially shore up, sort of domestic production in some of these industries. But I do think that you can't really understate the U.S. component of this and ultimately the Trump factor, right? This is something that the Trump administration has been pressuring Mexico to pursue for quite some time now. Their big worry, according to the president himself, really, is that those cheap Chinese goods that are then coming into Mexico then eventually make their way over the border. So that's part of the pressure campaign here, and also I'd say is fairly akin to similar tactics that we've seen the U.S. pursue elsewhere. Obviously, really trying to get some of those key economic allies to sort of pursue some types of tariffs or otherwise in some cases sanctions even against China. So I think again, obviously still a lot to come, still a lot that we have to see finalized within this budget plan. But I think it is a very interesting one.
Yeah. And talking of allies and alliances, we've heard from state media in both countries that North Korean leader Kim Jong Un will join Putin at a military parade in Beijing next week. How significant is that through the prism of geopolitics?
Yes, I think, very historic. First of all, to set the stage for you, Tom, this is, really critical military parade for China. For them, it's commemorating the 80th anniversary of the end of World War II. There's a lot of leaders that are coming to town, I think most notably Vladimir Putin, of course. And now you've got Kim Jong Un also joining. I believe this is his first international trip since 2023 when he went to Russia. He also hasn't been in China since January 2019. So that's before the coronavirus pandemic. So a really significant overseas trip for Kim as well. This obviously gives, North Korea an opportunity to bolster its relationship with China, one of its major backers, and it puts these three men in particular in the same room. So I think, and there's other leaders going as well from Indonesia, Vietnam, Pakistan, potentially opportunities there for Kim to meet up with other world leaders. So a really big one going into next week.
OK, Bloomberg's Jill Decis, thank you with the latest, of course, on the scoop around Mexico and North Korea's leader potentially heading to Beijing. Coming up, Peter Navarro calls Ukraine Modi's war over India's purchases of Russian oil. We'll bring you our interview with the White House trade advisor next. This is Bloomberg. White House trade advisor Peter Navarro has cranked up pressure on India once again to halt its purchases of Russian oil, repeating accusations that New Delhi is funding the Kremlin's campaign in Ukraine on a day where we've seen more Russian strikes reported, including hitting Kyiv itself. Navarro spoke to Bloomberg's Joe Matthew.
Are we actually in talks with India right now? Is there a potential for a deal to change that number?
Look, it's real easy. India can get 25% off tomorrow if it stops buying Russian oil and helping to feed the war machine.
Not sending that signal.
They're not. And look, here's the thing. I'm puzzled, okay, because Modi's a great leader. These people this is a mature democracy with intelligent people running it. And they look us bald-faced in the eye on the tariff part and say, we don't have the highest tariffs in the world, when, in fact, they do. There's no dispute about that if you look at the numbers. And then they say, oh, we're not going to stop buying Russian oil. Now, what does that mean? I mean, we've talked about this, but it's worth talking to your viewers again. When India buys Russian oil at a discount, and then Indian refiners in partnership in India with Russian refiners make that and sell it at a premium to the rest of the world, right? Russia uses the money it gets to fund its war machine, kill more Ukrainians, and then the next thing that happens, of course, is Ukraine comes to us and Europe and says, give us some more money. So everybody in America loses because of what India is doing. The consumers and businesses and everything lose, and workers lose because India's high tariffs cost us jobs and factories and income and higher wages. And then the taxpayers lose because we got to fund Modi's war, okay? The road to peace runs at least partly right through New Delhi.
War?
I mean Modi's war.
Let me ask
because the road to peace runs in part through New Delhi. I mean, that's a lot of money.
It's a lot of money.
It's a lot of money.
But there are some who say that we're losing leverage with China by eliminating the next biggest economic alternative.
You know, I'm so tired of these national security strategists being too cute by half. The reality is you got to stop India and China from buying Russian oil. You do that tomorrow when the war's over. Okay? The war's over. If everybody, including Europe, this is like Europe's still buying Russian oil, which is crazy. Okay? If people just stop buying Russian oil, then it's only a matter of time before Putin doesn't have the money to fund that war. So Modi's a big part of it. It's 1.5 million barrels of oil a day. That buys a lot of drones and bombs to kill Ukrainians. Okay, a lot. Okay, so what's troubling to me, Joe, is that the Indians are so arrogant about this. They say, oh, we don't have higher tariffs. Oh, it's our sovereignty. We can buy oil from anyone we want. India, you're the biggest democracy in the world, okay? Act like one. Side with the democracies. You're getting in bed with the authoritarians.
White House Trade Advisor Peter Navarro speaking to our team, of course, in the US. Meanwhile, Bloomberg understands the EU is weighing introducing secondary sanctions in an effort to prevent third countries from helping Russia circumvent the bloc's existing punitive measures against Moscow. EU foreign ministers will meet in Copenhagen later this week and are expected to discuss the use of the so-called anti-circumvention tool that was adopted in 2023 but has never been used. NATO estimates its members are on track to spend more than $1.5 trillion on defence just this year alone. The alliance has agreed to a new goal, of course, of 5% of GDP to be spent on their armies by 2035. This includes 3.5% on defence and 1.5% on related matters like infrastructure. And the Dutch Prime Minister and his cabinet have survived a no-confidence vote, easing concerns about a complete collapse of the country's caretaker government. The result means attention now shifts to campaigning for snap elections on October 29th for perhaps a more permanent resolution to the political crisis. Coming up, when 56% growth is not enough, are investors right to be concerned about a potential slowdown in demand for AI data centers? We get the details and reaction on Nvidia's earnings next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Nvidia earnings match forecasts, but blockbuster sales growth decelerates. after 2 years of booming AI spend. Shares in the world's most valuable company slip after hours. Bloomberg learns that Mexico plans to raise tariffs on Chinese imports after months of pressure from President Trump. Plus, Bayrou's battle, France's Prime Minister warns against new elections, saying he plans to negotiate directly with lawmakers over next month's confidence vote. We'll get some earnings right now in terms of Pernod Ricard, the drinks maker, of course, listed over in France. In terms of fourth quarter organic sales, it's a beat versus the estimates for Pernod Ricard. The redhead coming through on sales, coming in flat for the fourth quarter. 0% in the fourth quarter, but that is better than the estimates of a contraction of 0.8%. The company warning of weak sales due to the exposure to the Chinese market, which of course has been soft for Pernod Ricard, and the impact on higher US tariffs. The stock is down about 6% year to date, but the top line is that it is a beat in terms of fourth quarter organic sales. We know the forecast is in focus as well. Full year 2026 organic net sales trends are improving in the second half, according to Pernod Ricard. Let's get to the broader markets right now. We'll do more of a deep dive on that drinks maker in the next couple of minutes. But across the markets right now, the focus, of course, is on Nvidia and the earnings that came in line with estimates and yet did underscore that we have had a slowdown in that growth, and very high growth indeed, particularly when it comes to the data centers and the AI accelerators, but that's moderated. The S&P 500 a little softer after a fresh record high by the end of the close yesterday. Today, US futures down by 0.1%. Nasdaq 100 futures softer by 3 tenths. Europe, though, pointed to modest gains of 0.1% on the Stoxx 50 futures. Here in the UK, the FTSE 100 looking to add 11 points. Let's flip the board and have a look across asset. You've seen a bit of a moderation in terms of the sell-off that we've seen on the long end of the US Treasury curve. That's moderated in the session today. At the front end, the 2-year is currently yielding 3.61. It has been bid in recent days, of course, on expectations you got a cut in September from the Fed. Euro dollar at 116. Brent down 0.8%. Oil prices under pressure at $67 a barrel. And gold also a little softer, down 0.2%. Let's get the analysis around Nvidia right now, because on the face of it, Nvidia's 56% jump in quarterly sales is pretty impressive stuff. But if you compare it with previous quarters, as you can see on the screen, it is the lowest growth in revenue since the first quarter of 2023. That has stoked some concern that the AI boom is losing steam. Let's bring in Rob Lee, senior analyst at Bloomberg Intelligence, for the take on this. Rob, you've been working through the numbers this morning. What do Nvidia's numbers, what do the earnings tell us about that AI data center demand? That's a crucial part of this story. Is the boom really over, Rob?
Okay, great question. I think fundamentally there are no major concerns in the near term. The stock price reaction, I mean, from my perspective, I think it was a classic textbook setup. Very high expectations, as we've seen many quarters running with Nvidia. High expectations, quite punchy valuation. People expecting them to deliver another sort of beat and raise, and we didn't really see that. I think some of those expectations on the high end were quite unrealistic, to be honest, but they were solid numbers that don't really say a huge amount about the near-term outlook for the business. However, this business is substantially bigger than it was 18 months ago, so there's a base effect. I think that explains some of the deceleration you're seeing top and bottom line, but the business is still growing strongly double-digit, and they've got the market effectively to themselves from a Western perspective. The big question marks, though, remain the outlook for the Chinese business, and that remains highly uncertain. From my perspective, I think, to be blunt, the H20 is dead in the water. I think the most interesting takeaway, finally, from me, from the results was it does appear that the company is moving tact in terms of its China strategy. There appears to be some lobbying going on now with the US administration to convince them and to get permission to export the very high-end Blackwell chip into the China market. Whether that is successful or not remains to be seen.
Okay, so the H20, in your view, is dead in the water. Is this an Nvidia, as they look to that Blackwell product for the Chinese market, is this an Nvidia that ultimately can live without the Chinese market if essentially gets closed off to them, Rob?
Okay, well, I think if we look further enough, and as I've said many times on our little chats, China's pursuing self-sufficiency in tech. it's making strong progress on that front, but obviously it's not there yet, and it's a multi-year strategy across the board, not just AI. If you look in telecoms equipment, so many different subsectors of the industry. And obviously, going back to the earlier export bans we saw on some of these high-end Nvidia chips, that's forced the Chinese to refocus on innovation, to deliver and develop more computationally efficient models, and also to try and ramp up the supply of locally available chips from the likes of Huawei and Cambricon, which is a emerging high-profile Chinese tech name, in this part of the world. So I think all of that is sort of the backdrop of what's going on within the industry. And obviously, from an Nvidia point of view, there's still a big market there to be had in the near term. There is a sizable revenue opportunity, but obviously it's tied up with the geopolitical environment. I mean, to state the obvious, China is the main geopolitical rival to the States and also an economic rival. So what we've seen in recent headlines, we've seen this again, hokey-cokey, in, out on the H20. Can they export? Can they not? As I said, I think that's highly unlikely from where we sit at the moment. And it appears that the Chinese government and authorities are strongly encouraging, for obvious reasons, given that from their perspective, American suppliers like Nvidia are unreliable, or the administration is unreliable. Therefore, you've got to buy local. So I think as to whether Nvidia can tap into that demand in the near term, tied up with this geopolitical uncertainty, remains highly uncertain.
Okay, Rob Lee, smart analysis, of course, on the earnings that have crossed from Nvidia. Bloomberg Intelligence senior analyst. Let's go more in terms of the market take and bring in Marija Veitmane, head of equity research at State Street Global Markets, who has long advocated having exposure to big tech in the US, and presumably that has paid off given the performance. Marija, do you change your thesis? Good morning. Do you change your thesis at all on the back of a slowdown in growth for AI accelerators? Growth from a very high level, yes, but a slow growth story that is starting to decelerate now.
Yeah, good morning, Tom. Thanks for having me. I mean, our story has been for a very, very long time that there is unparalleled earnings growth in tech sector, and no other sector comes close. And again, I mean, we haven't heard anything in Nvidia earnings that kind of dispute that thesis. Earnings growth, sales growth are 50+%. Margins are 70+%. There is no other company that does it. I mean, just before we came, our segment came in, the Pernod Ricard had results, right? So we're talking about flat or decelerating growth. So that's the competition. So I think the tech story is still very strong, and now we stand by our thesis of being very constructive on the sector.
And Marija, we're showing a chart right now, the slowdown in that revenue growth. And it's, as we noted, from a very high level, of course, you've gone from 400% down to 56%. As you project out to 2026, and that revenue continues to decline, the growth continues to come in at slightly lower levels, if that is what transpires, how do you reflect on that? How do you position around that? Is this just how clean is this story for you still into 2026?
No, I mean, absolutely. I mean, the previous commentator, Robert, just mentioned that, I mean, it's much, much bigger company, so you can't really grow at 400% every year. But it's still, there is very little competition. I think Nvidia has a market for itself, and it's growing very fast. I mean, I was really encouraged to hear about, like, CapEx commitment for hyperscalers is still very, very strong. So the customers are there. They talk about sovereign AI. They're talking about finding customers for H20 chips that like outside China. So, I mean, the market is still very, very strong. So we really see that, okay, market needs Nvidia, and that's a great story.
There is the contention, of course, Marija, that you're very familiar with, that these tech stocks are priced to perfection. How do you push back on that?
I think that's, no, absolutely. So we had that question for years now. So our answer is very well rehearsed by now. So you have a set of companies like Nvidia, like tech sector, which have fantastic growth, forecasting, fantastic sales, forecasting, fantastic margins that are expensive. And you have another set of companies, your consumer companies, your healthcare companies, your small caps, well, what's not, that is really, really cheap. But they're not growing. They have, I mean, challenges with maintaining their margins, maintaining their profits, and you have to choose. You either buy high, very expensive quality, or you buy cheap stuff that is really not growing. And again, in a world of uncertainty, in a world of slower economic growth, you have to pay high price for good companies that generate growth. That has been our thesis for the last 2 years. It's still there.
Do you rotate out of big tech if we get a Fed that is committed to cutting rates?
Yeah, I think that is a really, really important question. So when do you rotate? So you rotate when you see broadening of earnings growth. So broadening of equity rally, so outside tech, where are the sector, other countries, other regions, when you see broader earnings. And yes, very kind of Fed and other central bank committed to easing monetary policy would be kind of the first steps there. But it's not just a couple of cuts this year. It's really kind of continuous path of lower interest rate when long end of the yield curve comes down consistently, and then we're beginning to see improvement in earnings. So yes, a lower interest rate would be definitely the first step in this kind of rotation process.
Marija, before I let you go, I want to ask you about what's happening in France. And the CAC are underperforming again for the second year in a row. And of course, the political risk is up front and centre. What do you do with French stocks at this point?
So short and sell. And I think political risk really is thrust into kind of France in the spotlight. But really the story is earnings growth. I mean, we're talking about Nvidia with 50% earnings growth, or tech sector with 20% earnings growth in Q2. For France, we're talking about contraction. Full year earnings expectation in CAC 40 is minus 10%. I mean, that's exactly what I'm talking about. You have expensive companies, expensive sectors that grow very, very fast. That's what you buy. You don't buy cheap sectors, cheap countries, cheap regions where earnings are falling. That's exactly a perfect example.
OK, Marija Veitmane, thank you for taking the time, hitting on the nose, of course, some of these key topics and the view there on tech versus certainly what's happening in France. Head of Equity Research at State Street Global Markets, thank you. Coming up, the Ryanair CEO tells us his hopes for 737 deliveries from Boeing over the coming months. Someone else who's also and always punchy, of course, in conversations. I'm going to bring you more from our interview with Michael O'Leary. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get back to the earnings story right now, because Pernod Ricard expects sales to decline in the beginning of its next financial year as the French spirits maker continues, of course, to grapple with both trade friction in China and the US. Let's bring in Bloomberg's global business reporter, Jennifer Creary, for the details on this and the takeaways. What stood out to you then, Jennifer? You go through the numbers. They dropped about 15 minutes ago. What really stands out to you?
Yeah, so the headlines so far, I think, are organic sales were fairly flat in Q4, so that was better than what analysts expected. Analysts were expecting a 0.8% decline in Q4. If we look at the full year, I think it's helpful to look at the regions. So unsurprisingly, there was a decline in China. We know that demand has been softer there, but also there's the kind of lingering impact of those EU-China tariffs and also the removal of duty-free sales, of course, really impacting companies like Pernod. But also there's some weakness in the US as well, also unsurprising, down 6%. I think what's really interesting here is the company has highlighted there's a gradual improvement in the outlook for global travel retail. So, things are looking up. It's not all a bad picture for the company. OK,
really interesting that you highlight that drop in the US market of 6%, given the relative strength of the consumer there, but of course a different set of data points to go on versus what's happening in China. What do they have to say about, you touched on this, the tariff impact. What specifically did they have to say about tariffs?
So on tariffs in this release, they've highlighted the US. As I mentioned, US is down 6%. But a lot of that tariff uncertainty is impacting distributor inventory levels at the year end. So no distributor wants to have excess inventory. And that's really going to bleed into 2026, particularly in Q1. And hopefully the company says there'll be some recovery weighted towards the year end.
OK, Jennifer, thank you very much indeed. Breaking down the numbers from Pernod Ricard, what it tells us as well about the broader story around the consumer in China, in the US, and the tariff impact as well on global business. Jennifer Creary, who covers global business for Bloomberg. Talking of global business, let's bring in our conversation with Ryanair's CEO right now, saying that Boeing has accelerated 737 MAX deliveries, with the carrier expecting to receive 25 737s between August and October. Michael O'Leary sitting down with Bloomberg's Guy Johnson.
I I think we're reasonably optimistic. I mean, I'm not sure the market is right, but we've had constrained capacity growth this year. So Boeing have left us short of aircraft. Certainly the summer trading has been strong. Forward bookings are about 1% ahead of where they were this time last year. Yep. Last year, fares were down about 7%. It looks like we'll get back most of that 7% fare decline this year. Not all, but I'd be reasonably hopeful we get most of it back during the summer.
Where's the market looking wrong?
I think there's more growth available in the marketplace.
So the market is lowballing.
Fares are recovering this year because capacity is constrained. But there's certainly strong demand for air travel, certainly from the UK to Europe. If I had more aircraft, I think I'd be able to deliver more growth.
Okay, you're going to get more aircraft.
Yep.
You're going to get them from Boeing. You're getting 737s earlier than anticipated, 25 of them beginning in October rather than 6 months later.
Yep.
Does that mean you increase your passenger targets?
Not in the UK because
Anywhere?
Oh, yeah. I mean, we're growing very strongly.
So you're going to raise passenger numbers because of those aircraft coming
Exactly.
Early.
I mean, we will grow. This year, we'll do about 206 million passengers in the year to March 26. Next year to summer 26, we'll grow to about 215 million passengers. So
is that brought forward? Is there any bring forward?
No.
Because you're getting the aircraft early.
No. I mean, we're taking the aircraft early to, if you like, to secure that growth for next summer. The only area where we can deploy those 25 extra aircraft will be this Christmas. So there'll be a lot of additional flights in most of our markets, including even in the UK at Christmas. But other than that, no, we'll sit them on the ground until we get to next April.
Are you bringing them in early because you're worried about tariffs?
We're bringing them in early because we're worried about tariffs, but also we're worried something else might go wrong with Boeing. So get them in early. If Boeing, it's a good sign that Boeing are able to deliver these aircraft early. We want to take them early, so at least we've guaranteed we have them for summer 26.
So your confidence in Boeing is still not that high? You're still worried that things could go wrong?
We should always be worried. The experience of Boeing, but I mean, the very fact that Boeing are able to deliver these aircraft 4 or 5 months early is a good sign that the manufacturing process is going well. I think Stephanie Pope is doing a good job in Seattle, and the quality of the aircraft we're getting, the fuselage out of Wichita, the aircraft out of Seattle, has immeasurably improved in the last 12, 18 months.
Scott Bessent, US Treasury Secretary, has just been on television, and he's criticised Boeing for delivering a massive buyback rather than investing in R&D. Do you have some sympathy for that?
I don't really. I mean, if Scott Bessent wants, what he should be doing is supporting Boeing. One of the reasons Boeing can't make more aircraft is the FAA won't approve the increase in the production rate from 38 to 42. We still need to get the MAX 7, MAX 10 certified. So Scott Bessent should let Transport Secretary Duffy deal with Boeing, get the increase, get the production rate up, and certify the MAX 7 and MAX 10.
Ryanair CEO Michael O'Leary speaking with Bloomberg's Guy Johnson. Just reflecting on the stock price performance for Ryanair year to date, you're seeing gains of a little over 30% for Ryanair. They are confident they're going to get more deliveries of Boeing and that they can match that with the supply of demand from their customers. That's a check on Ryanair's stock price then, as we hear from the CEO. Now, some of the stories making the news this Thursday. Europe's new car market, meanwhile, rising the most in 15 months in July as consumers shrugged off concerns over the global economy. According to the European Auto Manufacturers Association, registrations climbed 5.9% from a year earlier, driven by sales of fully electric and hybrid models. Plug-in hybrids saw the biggest jump, with sales up 52% on a year ago. The US State Department moved to distance itself from reports that at least 3 Americans with links to President Trump travelled to Greenland in a bid to get the territory to cede from Denmark. On Wednesday, Denmark's foreign minister summoned the acting US ambassador after a report by Danish public broadcaster DR said at least 3 men with ties to Trump had conducted covert influence operations in Greenland. The Arctic island is part of the Kingdom of Denmark, but has its own government. An AI startup, Anthropic, says a hacker used its technology as part of a widespread cybercrime scheme that's impacted at least 17 organisations. The hacker used Anthropic's agentic coding tool in a data theft and extortion operation that affected victims across government, healthcare and emergency services. In a report, the company said the attack demonstrated, quote, a concerning evolution in AI-assisted cybercrime, in which a single user can operate like an entire cyber criminal team. Plenty more coming up. This is Bloomberg.
When we have a beat and stocks don't go up, or a hot stock like Nvidia doesn't go up, where it starts to roll over a little bit, that suggests to a trader and a technical analyst that everyone who might own the stock already does. But we're nowhere near there yet.
The reason the stock has recouped some of those losses and I think will retain strength is because of that guide for Q3. It was very strong. It's really all about Q3, and it's because Blackwell and Blackwell Ultra are starting to ship. And if you know that story, you're not selling this stock right now.
They were very good about signaling to the market that the China overhang could continue, and that has about a $5 billion impact in the next quarter's numbers. So having said that, 54 billion represents a very strong showing, which means they expect hyperscalers in other parts of the world to pick up that slack.
Some of our guests reacting to those earnings from Nvidia and talking there, the last guest, about the China overhang. And you have that expressed in terms of the inventory build-up for Nvidia, and much of this will come down to the H20 that has not been able to ship, despite the fact that they have those export licenses, not been able to ship largely into the Chinese market. And you can see the inventory build-out in the third quarter for Nvidia. And again, much of this will be H20, and this is an increase of almost $5 billion in terms of inventory. So that is the black mark in terms of the report from Nvidia that again came through with results that came in line with estimates as well as margins that improved. Let's have a look at one of the key competitors in the domestic market in China when it comes to Nvidia, and that is Capricorn. This is a stock that has rallied and at one point became the most valuable stock in the domestic Chinese market. It has now lost that crown, but despite that, it is up more than 120% year to date. This is a company founded in 2019, and this is a company that is private and yet has, of course, received that at least jaw-boning support from the authorities in Beijing as they try to get those domestic players in terms of large language models and the labs to buy domestic chips. And Capricorn is a clear beneficiary of that. Their chips don't quite match Nvidia, but they are performing fairly well, particularly when it comes to the inference part of the AI story. And it's worth noting as well that in terms of what's happening with the French debt story, we are just 5 basis points. So as we switch from tech to the politics of France and the Prime Minister saying that elections are not a good idea, we're just about 5 basis points away in terms of French 10-year sovereign debt yields matching those of Italian BTP. So watch that story and see how that evolves. Again, the Prime Minister giving an interview yesterday on French TV and saying he's going to be working with lawmakers over the next 12 days. But the spread continues. Carmenet warning, of course, that you could get a 100 basis point spread over German equivalents on September the 8th. Bloomberg Terminal users can get all these charts, of course. The opening trade is up next. Stay with us. This is Bloomberg.